And we are live. 1 2 1 2. Can you hear me? I think we've got audio. So today I'm going to talk about people that have not done well with the crypto. So people that have bought crypto, people that have held crypto, and have not done anything with it over the past, however long years. And I've told my story about um, how I started and how it kind of led on to all the different things that I've done in crypto. The very first thing that I did in crypto was this. And I know that this will be a familiar story for a lot of people. And the familiar story is investing your hard earned money. In my case, it was $1,000, call it $1,000, could be 1,000 quid. And what I did, cheers, Carl. And what I did was put $1,000 into this shit coin, and it went to nothing. This is the only chart I could find for this. There was this coin, and there was another called POE, and I was unable to turn this $1,000 into anything. So this was 2017. I tried this, invested it in the shit coin and a coin called POE. My $1,000 investment went to $30. I then kind of went on, and bear in mind there's a gap in between these that I left in 2017, and I came back in 2020. And I came back in 2020, and in 2020, everything was about these types of platforms, and there's still some available. And it was a platform called Celsius Network. And essentially, what Celsius Network was a centralized platform, kind of like an exchange, where you would lock up your coins on the app, and then what you would do is yield that crypto and get whatever it would be. Pretty good rates, to be honest with you. At one point, I think there was like 15, 16, 17, 18, even 20% back on a stable coin. And even with that BTC, you're getting 5, 6% back in their own token, which was Cell token, Celsius Network. But unfortunately, this went bust. We were told by the CEO, Alex Mashinsky, banks are not your friends. We are your friends. And it actually was one of the largest holders of Bitcoin. But unfortunately, they were misusing users' funds. They had a bank run and it went bust. After that, I went on to certain coins. One of them was this Jade Protocol. And if I don't know if you can see this, I could probably zoom in. It was it was a coin offering 605,000% APY, 605,840%. And of course, it did nothing. I don't think you can even search this. And that was the insane APY that I had in my portfolio. Now, this is the big one. This is the big one because I get this from every single person in the comment section. Because all they think you need to do is copy this, which is the S&P 500. People think that this is like a crypto coin. So if you invest in your crypto coin here, 5, 6 years later, the value of it will be up here. And it doesn't work like that. That's the S&P 500. And if we go back to here, This is a coin I used to have, EGLD. And as you can see, the chart looks nothing like the S&P 500. Quite the opposite, actually. That's EGLD. That's the S&P 500. Complete opposite charts. And I learned all this the hard way. But there's still people doing this shit. There's still people with coins. And I've said this many times. There's people with coins like this, and it's not just Multiverse X, where the coin is just doing this. Right? So many people. And then there was NFTs. That was a craze, you know. This is one of the NFTs that I bought with absolutely nothing now. And then, of course, what it kind of leads you down is this trading. Now, don't get me wrong, there is some good traders out there. You can make money trading crypto. Okay, you can make money trading crypto. It's not out there, it's not an unbelievable thing. But for you to learn trading, for you to execute trading, you have to do it on a regular basis. It has to be something that you do and you perfect as a craft. And unfortunately, 99% of people don't have that time. All right, if you're like some 17-year-old kid, you can, you know, you've got no responsibilities, fair enough. You can learn it, but it takes a long time, a very long time. Now that leads me on to what I always talk about, which is this. But what I want to just say to this is most people, in my opinion, right? The immediate way, not financial advice, that someone in this situation holding a coin like this, and I'm telling you now, it will do nothing. The immediate thing to UnF it, not quickly, but reverse the trend in crypto, is to go here and look at the number one commodity, or not commodity, but the number one crypto is Bitcoin. And whatever you've lost on your portfolio holding these shit coins, and I call them shit coins because they are, you will reverse the damage done very slowly if you just swap it for this. It will take time, but if you are mentally sick of crypto and sick of losing money, there's your answer there. It's not rocket science. That is it. And I know what it's like at the moment. This dude on X shared this. And he's put a massive post here, basically saying, I've been trading crypto since 2017. He saw expectations of BTC reclaiming 100K and moving to all-time highs. Here we are nearly a year later and things look worse. Many have given up. And all this that he's saying, negative said, crypto community, blah, 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 mainstream, Bitcoin is less volatile. Where's the silver lining? I don't know why a guy from 2017 does not realize the bear market. I mean, I don't know how many times I have to show the same chart. Like, this is supposed to be a guy that knows what he's doing, but it is a pretty stupid status to put. Because if you know anything about crypto, and some idiot in the comments clearly didn't know, he said, how do you know the cycles? If you know Bitcoin, if you understand Bitcoin, it has 4-year cycles. How does it have 4-year cycles? It has 4-year cycles because it has it built into the code. What is built into Bitcoin's code is the fact that every 4 years there is a Bitcoin halving, and miners every 4 years get half the rewards they used to from the previous 4 years. That is why there is market cycles, because of the can't speak, the supply shock of being half rewards than they used to be. And for some reason, because the US election falls in line with it exactly, which is a coincidence, is it not? Because that's every 4 years. There is always a bull run starting around election time, every single time. So we can assume that it will happen again and again and again and again. And nothing has happened yet to show this has been invalidated until this whole model, I'm not showing it, until this whole model gets invalidated, it will happen again and again and again and again. And it's not just me saying it, it's Bitcoin's code. Bitcoin's code says this will happen, and this is exactly what's happening. A halving every 4 months, then from the halving, there is always an all-time high, and it always happens to be literally the exact same time frame every single time. And I've put on here the post. This here, look, all-time high post every single time. So to go back to what I said about buying BTC, if you know this, then BTC is the good route. Going back to this guy, supposedly in crypto since 2017, I've no idea why he doesn't understand the cycles or he doesn't understand patterns, because literally that is what's happening. I don't know how many times I can say it. I literally don't know how many times. So if you know by looking at this chart that we're in the bear market, so you're not panicking, right? You're not shitting yourself because we're in a bear market. So you know that, right, if I'm going to do anything now, it will reap rewards when we get to the bull market. So if you've got your portfolio, obviously immediate switch is Bitcoin. That's it, done. If you're sick of crypto, if you're sick of what you're doing in crypto, do that, right? Not financial advice, do that. And then immediately you're going to have the turnaround when Bitcoin inevitably runs again. Unfortunately, it may mean breaking even depending on how invested in shitcoins you are, but it's better than, it's better than continuing to hold and do nothing, which is that. Now, obviously, I'm going to speak about liquidity pools, and I've already seen this guy here. I've opened 3 VFAT positions. If you know what VFAT is, there's a link in description, and it is a aggregator of yields. To put it into easy context, you can yield your crypto and earn on your crypto a monthly, daily, weekly, monthly reward. Yeah, it's variable, and obviously it changes all the time. One that I've been testing, and I've mentioned the S&P 500, is, and I mentioned it last week, is something called Robinhood Chain. And Robinhood Chain is a new chain that has launched, that has got a lot of volume going through it. And it's just getting up and up and up with the total value locked. And essentially, because Robinhood is a broker as such, a big one in the US, they are bringing stocks to the blockchain. It has been done before, but they're specifically, because they are a broker, and the idea of launching it is the real world asset. That's the kind of USP as such. So, for example, here in front of you, you can see this is a tokenized S&P 500, SPY, with USDG, which is a stable coin on Robinhood. It's only 96% APR, right? Because it's a new launch chain, you get good APRs. But if you think about it in the context of what we speak about, and what we speak about is not getting into stupid shit coins, i.e., you could call that 'cause it's just doing shit, or you could call the ridiculous APYs, i.e., Jade Protocol. What we're actually doing here is we're getting 96% on the S&P 500. So when we talk about ranges, and we go back to the S&P 500, in the past 6 months, this has moved 12%. So it's going up, which is good. But in terms of volatility, when you think of liquidity pools, and they go, what if it goes out of range? 12% range. This could be 3-4 months in range because it goes slowly. This isn't crypto because it's tokenized to the exact same thing. If you look at, what it's doing in a month, it's up 2%. That is nothing. But what this actually does, and what this actually proves, is if you are in a liquidity pool with something like the S&P 500, some of the concerns that people have in terms of things getting rugged or not working out kind of get resolved, because one half of the liquidity pool is a stable coin. Yeah. And the other half is a tokenized S&P 500 specifically made by Robinhood on the Robinhood chain. And Robinhood are a broker, massive, massive broker in the US. So the SPY literally mimics the S&P 500. So this isn't a coin that's going to go to zero, right? This isn't a shit coin pool, but you are getting 96% back ROI in this, right? What's that a month? 96. And obviously it can be compounded. And this is something that I'm testing at the moment. 96, if we divided that by 12. Oh, so I did 69. 8% a month. You're getting 8% a month. Would you get that? Yielding on the S&P 500. Thank you. On the S&P 500, you're getting 96%. Now, obviously, this could be variable and it could go down, but there's nothing else like this because you're getting the gains from this because it's just going to go up. So the value of your deposit isn't going to shoot down because people are like, oh, well, why is my deposit down? Well, for example, if you're in this ETH USDC pool, it's because the value of the ETH has gone down. Yeah. But in here, the S&P 500, let's be honest with you, if the S&P 500 tanks, the whole economy tanks, And that is where we're at. And this is where people got to shift the mindset. Because the old mindset that people have with crypto, let's just make that a bit small. The old mindset people have is hodl, sell in pump, and then then what? Sell to fiat. That's kind of the plan. Well, it's a flawed plan because one, we've shown that hodl doesn't always necessarily work with most coins, to be honest. Selling a pump, you'll never sell. That's the other issue, round tripping your bags. Do you think everyone sold here? Obviously, some people did. Majority probably didn't. I certainly didn't sell here in this shit coin. I was down here. And sell to fiat. So a lot of people say, well, I'm going to take profits to fiat and then do what? Because in my opinion, BTC is going to keep going up. So a new simple strategy would be yield So ROI is instant. VFAT will tell you what you get daily. You know? So yield is your ROI. You don't have to worry about prices in the bear market. And let's just put it into perspective here. Let's just say you went into, and you don't have to obviously, but let's just say you go into something like these pools on the Robinhood chain, where you're yielding the S&P 500 for 96%. Let's say you're in this. You don't worry about, oh, what price is ICP, what price is XRP, blah, blah. All you're doing is yielding a decent amount and getting an ROI back every single month. That's the new game. And then yield is your choice, what you do. I mentioned before, and I'm going to be doing a vlog on this. This is a MetaMask card. I have no affiliation with these, but what you can do is the yield that you're earning in your crypto, you can directly spend it, download the app. It's not just MetaMask, there's other ones as well. And you can literally have it in your Apple wallet like that. And I'm going to do a vlog on it. And go out and spend it. It's that simple. Or you can go to stage 2. And stage 2, maybe if you have Bitcoin. So stage 1 is the new ROI, which is that. But stage 2 is the BTC one. And I have got actually something to show on this. And it's this. Just remove these. And it can start at either point. So it can start at the BTC point. So you've got BTC. So you're keeping your BTC. You supply it to Aave, Spark, Morpho, whichever one. Take a loan back in USDC. Supply the asset to liquidity pools. Earn your monthly income, which I've just shown here. And then you can then, with your yielded assets, swap them back into BTC, and the merry-go-round flywheel continues. But again, dependent on what crypto you have, what your risk tolerance is, if you believe in BTC long term, or you just want to spend the cash now, that's up to you. There is a guy, Simon, in our group, and he essentially said to the group, I've got some cash. If you had to just start with it, what would you do with it? And everyone's giving their 2 cents. Because his not strategy, but his plan is to retire on, he's saying everyone wants the million target. But essentially what it comes down to with retirement fund is people build a retirement fund because they want to live off said retirement fund. So the idea is, and a lot of people do this, they will have either a pension, private pension, or they'll have, say, some stocks and shares, and they will take dividends or cream off some profits, or just take cash out each year to live on it. And this could last however number of years, depending on the size of the pot. And people always point to $1 million being the optimal amount to live on, probably because of the number, but due to whatever lifestyle they want or whatever monthly figure they feel that they can get out of that or live off that. But my question back to him, to Simon, would be, he's looking for that retirement fund. So essentially what he's saying is, what coins can I put it in that is going to generate this, which is going to turn this money that I've got into a larger pot of money later on? But he's looking at it the wrong way, because what he can do is get that, because he wants to put it into crypto. So that's obviously, we're going past the first hurdle. He understands crypto. He wants to use crypto as the vehicle to do this retirement fund. So essentially, what he can do, and we'll use the example I keep coming back to, which is this S&P 500. If he was to put it into this, 96%, which he worked out, was 8% a month. All you need to do is work out the maths for how much you need on that. Even if it's 5% a month. So if you had 20K and you got 5% a month, that is 1K a month yield that I've shown you can spend. So let's just scale that up. 40 grand, 2K a month, 80 grand, 4K a month. And you think, do you really need that million in crypto? Or do you need that million at all? Obviously, personally, I'm not putting my eggs in all one basket, all in crypto. I do have stocks and shares. But what I'm trying to say is, people get this figure in the head that they want, say, a million, or they want like this big figure in terms of what they feel is the figure that will earn them income. It may be lower than you think, and it may be more achievable than you think. And you can start yielding now, because the compound effect will take place. So if you are earning, say, 20 grand, a grand a month off 20K portfolio, or even if it's 500 a month, that will compound over time. If your plan is to retire, say 5-10 years time, if you're plowing 500 compounded over and over and over again, 500, you're putting 6 grand a year into it. That's compounding with the ROI that you're getting back monthly. Your monthly ROI just keeps getting bigger and bigger and bigger. Gets to the point where you don't have to reinvest it anymore, and you just live off the yield. That might not be the full part of your living expenses, but it could be something simple. Let's just say, for example, it may not be your direct debits or whatever, but let's just say you spend £1,000 a month on your debit card on just whatever, going out, coffees, beers, groceries, petrol, whatever it is. If that was just covered by your yield, wouldn't that make it a lot easier if it's just covered by your yield? And that's the thing. That's the thing. There is always a risk, of course. But what I'm trying to say is, this doesn't necessarily have to be the replacement. But like I'm saying, if you're getting a yield back, you may have to put less in than you think. That's the point I'm trying to make. Because people think, well, I need to put a lot in to do this. Well, not necessarily. I've already said the 20K a grand back. Maybe that's all you want out of it. And if you are doing that out of it, that could go a long way to some people. That could go a long way. That could pay for your vacations or holidays, whatever it is. Even if you're just earning 200, 300 a month back out of it at first, that can pay for quite a bit. It all adds up. It all compounds. And that is the main thing that I'm trying to get across. You don't need a ridiculous amount. But this here, what I'm discussing, is surely a better way to do something than what I've spoken about previously, which is this. Because the mentality with this is basically that. You're hodling, you're going to sell in the pump, you're going to sell to fiat. But when are you going to sell? I've already shown the crypto bros on this channel, the XRP guy, the ICP guy, constantly over and over again saying that this coin's going to 60 go up 60,000%. You know, XRP is going to 1K, 10K, whatever ridiculous amount. And because they say stuff like this, people never sell and they just round trip again and again and again. So if you're still into crypto, I don't know why you are still doing this method. Fair enough if all you want to do is put it in Bitcoin and leave it, but I still think it's a missed opportunity. I do think it is a missed opportunity if that is all you're looking to do. And again, there you go. 5 to 10 ETH, good time to play with in DeFi, decent returns. So if we look at 5 to 10 ETH, what's the price of ETH at the moment? I've got it in the wrong currency. So 5 ETH is basically 10K. And 10 ETH is, 18,000. So we're talking about that. But there you go. If you add that in, and we're talking about the 5% a month, uh, $936 at 5%. Even if it was 4%, 3%, the ROI you're getting back is better than what you're going to get now. That is essentially what I'm trying to say. Because you're just making your crypto work for you. I've seen so many stories of people who have had, 200 grand, now it's worth 50, and they're not doing anything different to what actually got them to 50K from that 200 in the first place. One guy I had a call with, and he had 50K, and it was with 5. And it's sad to see because all he did was hodl, and it just went to nothing. There's actually a guy, I've said this before, who owns this coin, who's gone from 300K to 13, I think, which is insane. And imagine even with that 300K, even if you just put 30 aside doing this, there's just so many options to look at and to learn and to choose and to do the education to understand it all. That is the main thing. But that's it for me today. Hope you enjoyed the stream. Put any comments on the video when it's finished or now. And yeah, if you like my content, like, subscribe. If you want to book a call with the team, join the group. There's a QR code there for you as well. Thanks for watching, guys, and I will see you all very soon.